Hey there, thanks for tuning in. Welcome to Investing in Germany. And today I want to talk about investing in Germany in stock market. If you look around you, you will see that not a lot of people are investing in the stock market directly. They go through a different route or an indirect route like private pension fund, employees pension scheme, or even mutual fund, for example, and they try to avoid going into the stock market directly. This is because of the fear of the stock market volatility and also fear of not knowing much more about the valuation or how to what to buy and so on. So this has really made sure that the number of people investing in the stock market is really fairly low, and the environment in the Germany is more conservative. And but recently, like 3 4 years back, when the neo brokers came into the picture in Germany, the accessibility to the stock market has really gone up. So now you can also invest in stock market from €1. That's really crazy. So this is how accessible it has become, because 4 or let's say 5 6 years back, we have to pay really a lot of money to invest in the stock market for doing each trade. If I remember right, at the beginning when I was looking here like 6 7 years back, I had to pay like €4.9 for any transaction. So even if I buy something for €10, I have to pay 4.9 plus euros. And also if I sell something, then again 4.9 euros. So round about, you are already losing €10 getting into a stock and exiting out of the stock. So this is really expensive, but now it has become really cheap, like almost free, I would say. And even scalable capital has a flat rate. It's a really good trend that what we are seeing here, where accessibility to the stock market investment has really gone up. And today's video, I want to talk about a framework which I use for my investment, and it has really worked. I will also touch about the brokers that I am using and also the taxation and how you can really invest into stock market very easily in Germany. So let's go into the topic. So what you see here is the mirror board. So this is the complete picture or complete idea what I am doing in the investment or investing in Germany. And I try to sketch it as a flow diagram so that it's much more easy for you to really understand and grasp what I'm really trying to say here. First, whatever it takes, I need a money to start investing in the stock market. So I'm not going to go and get a loan and invest. Getting a loan and investing in the stock market is one of the worst idea that you can have in your entire life. So never go ahead and get a loan just for investing. I get an income out of which at the moment for me 70% of my income goes into my lifestyle spend, which includes going out for a coffee, going out for a dinner, or going for a holiday, booking air flight, booking anything. So everything goes into 70% of my income, also including the kids expenses like the kindergarten, and so on. Everything goes into a 70%. And 30% is the free money or the free cash flow that I use from my income to make it work for me and also save it for me. So what happens here is that 30% of my income goes into my investing fund. Before creating an investing fund, it is really important for you to have a savings account or an emergency fund. So emergency fund is a fund which really helps you in the time of emergency. For example, let's say your car broke down and without car you cannot work. So you have to really fix the car, but then here you need money. And in this case, you cannot really go ahead and take the money out of your investment, but you should take it from your savings. This is the idea behind it. And also avoid you to go and take an unnecessary loan and paying those interest to the banks and wasting your money. So this is the idea of that. And what I'm doing here is that my 30% went into emergency fund. The target for the emergency fund for me is to get it up to 6 to 8 months of my net income that comes into my bank account. Once that is filled in, all my money then went directly into my emergency fund. And since now we are in high interest rate environment, I have parked my emergency fund into an account where they are paying me 2% annual interest, and it's also liquid, which means whenever I need it, I get it within a day or two. So the money is there for me. It's not into a fixed deposit, where getting the money from a fixed deposit could be really time consuming, and you don't need to go through this unnecessary process when you need the money very urgently, or it's an emergency case, right? So here the money is very highly liquid. So this is what I have done. And then 30% of money now goes directly into my investing fund. What I have done here is that the mid of every month, I have an automatic scheduled transfer from my bank account to my trading account. So 30% of my money goes directly into my trading account. So this is creating me an habit, because the money is not in my bank account for me to spend and waste it, but it is in my trading account where I can go ahead and invest in it, or buy a ETF, buy a stock, buy a securities, or buy a bond, anything. So it is into my trading account for me to do my next step to make the money to work for me. So for this, I'm using three brokers. So at the moment, all my money goes into Trade Republic because they are offering me the 2% annual interest rate paid monthly. So it's a really attractive offer that I have. So I'm putting all my money directly into my trading account at the moment. Sorry, Trade Republic at the moment. And also my emergency fund is also within the Trade Republic, where I also get the 2% annual interest rate. Here you have to be really careful, because investing and saving is completely different. What I have done here is I have merged the both through the Trade Republic, but then I am really conscious of what is my emergency fund and what is my investing fund. So because you need to really understand the difference between the savings and investing. So savings means the money is there for you whenever you need it, highly liquid, it's for emergency. And investing is where you ask the money to go work for you to create free cash flow, and which in turn creates a compounded effect for your money. So investing is completely different than savings. In investing, it could be that you will enter into a market where your investments will keep going down, like say 30% or 40%, and stays there for a couple of years before it starts retreating. So investing fund is also risky fund. So you have to be really careful there not to merge both. You have to keep it separately, because now I know exactly what is my emergency fund necessity is, so I can manage it much more easily and much more cautiously. This is not be the case for somebody, and this is also not the case for somebody who's really new to investing. So try to keep them both apart. So what I'm doing here is that I have three accounts. So D0, Trade Republic, and Scalable Capital. So these two are German accounts, and this is a German brokers, and D0 is a Netherlands-based broker who allows me to invest in different exchanges around the world. For example, with Trade Republic and Scalable Capital, I cannot invest in Swiss stocks in Germany, so I need to go to a Switzerland exchange and then make my trade there, which Trade Republic and Scalable Capital, they don't allow me to do. For this reason, I use D0, where I can go to the international exchanges, almost all major international exchanges, and invest directly into these exchanges and create money or wealth there. So this is my three accounts that I'm using. I'm fairly okay with all the three. So from the investment perspective, I have set out as a 4 pillars. Let's say there are 2 pillars which is completely no-go for me. So first one is a mutual fund. I don't do mutual fund. So I think mutual fund should be banned, because mutual fund does not add any value, because you are going to give a fund manager, let's say 2% of your investing fund in order for him to go and make a trade and beat the market. But then 80% of the fund managers, they don't beat the market. So there is no value in giving the money to the fund manager for them to go and invest in. Even those pension funds or those mutual funds, the other guys are investing in Germany, they are really underperforming the market. It's unnecessary for me. So I don't do a mutual fund. And another really speculative, really risky bet is the P2P and crypto. This is something I also don't do, but people tend to do it, but it's really risky. And what I really do is these two stuff, the ETFs and the stock market, direct investment into securities or businesses in the exchange, in the stock market. And ETFs, I have 3 savings plans, which I will come in a different video. And then I also have a stock market investment. So this is something that you can go ahead and invest in. So before selecting a broker, I would say that just go for a neo broker, which is fairly simple, fairly straightforward. They offer you very less charges for making an investment. So once you really understand the investment, once you really enter into the investing journey in Germany, then you can go ahead and try to find a different broker if you would like to, for example, D0 or Interactive Brokers or Cap Trader. There are thousands and thousands of brokers available in Germany. Also Neo Broker, there are quite a lot of Neo Brokers available in Germany. I would suggest you to just go ahead and open an account from Trade Republic or Scalable Capital or any neo brokers where the cost is really low, so that you can experiment yourself, you can really understand, you can really gel into the investing journey, because this is really important. You should not have a really negative experience, and also, yeah, not to make your mind to think that you're spending quite a lot of fees for making an investment and then you really don't get that habit. So try to check out those neo brokers that is available in Germany. What's really interesting with the ETF in Germany is the taxation. So ETF capital gain only 70% is considered as a taxable income. So for example, if you are making 100 euros by buying and selling an ETF and only 70% is considered as a taxable income, so 100 euros, only 70 euros then comes as a taxable income. 30 euros is non-taxable. So it just goes away from your taxability. So it's a really good offer that we can get in Germany. In addition to that, you also have a 1,000 euro free capital gain income that you can have. So which means that if you're saying getting 1,100 euros by buying and selling stock market here, and then only 100 euros is considered as a taxable, up to 1,000 euros is not taxable. If you're a couple, married couple, then it goes to 2,000 euros. So this is a new stage that we are coming in. Last year it was only 801 euros for it, and now it has become 1,000 euros because of the inflation and all the other funny stuff that is happening in the world. So this is really a good chunk of money. If you consider this with the ETF, since only 70% is taxable, which means that you get into the taxable region only if you are making capital gain only from the ETF from 1,425 euros or something like that. So there you have more additional room for making profit just within ETF. Another important topic that I also want to discuss here is the filing the tax for your capital gain. So if you are having a German brokers like Trade Republic or Scalable Capital, they do the tax filing for you. You don't need to go and do an external tax filing for your capital gain. So these guys do it. But with the Day Zero, because it is a Netherlands broker, they don't have this facility. In this case, I have to file my capital gain coming from the Day Zero. So this is something for you to keep in mind. I would say just stick to the German brokers, get into the investing mindset, get into the investing habit, and then you can decide what fits you and so on. So this is the framework that I use. So 70% goes into my lifestyle, 30% goes into investment. In investment, I do ETF and stock market, and that's all about it. I don't really complicate stuff. I keep it really simple and stupid. And what's really important in stock market is that we don't do a lot of crazy stuff and a lot of crazy investment ideas. So I'm more into value investment, and I have a really concentrated portfolio which really fits for me. So over the years, I've really understood how it really works and the valuations and so on. So I stick to a really concentrated portfolio of stock market, but this is not something that's really open for all. Here you could really consider the ETF portfolio, and I have created a separate video series for the ETF where you can understand what ETF is, and also I have presented a strategy for the ETF in 2023. So that's for it today. Thanks for watching. See you in the next video.